Welcome to the Mortgage Busters show. Viewers, we've got a fantastic lineup for you tonight. In the past few episodes, we've had some great guests on.
That's right.
Last week, we had David Haycock, who talked about how to expand your super at a much faster rate of knots than you used to. But also not only how to improve your superannuation package, but also how to pay down your mortgage really quickly. That's what this show's all about.
Mr. Superman.
Mr. Superman, my Superman, getting guests in that know their stuff, the experts in the trades, so that they can help you get rid of your mortgage as soon as possible. So you can walk into a bank and say, you know what, this is my last payment of my mortgage, and they've got to open up their vault, take out their title and give you the title to your home. And believe me, ladies and gentlemen, that is the best feeling in the world. And we're privileged to be with Niel Baker from the Princeville Credit Advocates, a very, very handy person to know.
Oh, yes.
Niel, welcome to the show.
Thank you very much, Greg.
Thank you.
Welcome.
Thank you, Adrian.
So, how do you help people? You remove defaults and court judgments off their credit record.
Yeah, exactly right.
Can you give us a bit of a background as to how you came to do what you're doing?
Sure. Our director of our company has got a lot of expertise in the lot of laws and regulations that must be followed before people are allowed to be defaulted or hit with a court judgment, and that of course ends up on their credit report. He's put that expertise and knowledge into a business where we advocate for people who have got problems with their credit reports.
So it could be like a Telstra bill that wasn't paid on time?
Exactly. Or a credit card that they've been defaulted on, or a court judgment over council rates that were late. It could be a lot of things. In all instances, as I said, businesses must follow a whole lot of rules and regulations before they're allowed to take what is a very, very serious thing, to put someone down for 5 or more years on a credit report that will stop them getting a loan, stop them getting a lot of things.
Niel, what is the difference between a default and a court judgment?
Yes, Adrian. The easiest way I can explain, a default is what they call an unproven accusation. It's the listing company or the company that's defaulted you. It's their word to say you didn't pay your bill on time. It hasn't been tested in court or anything like that. And as an unproven accusation, the only thing that happens is that it goes onto a credit report. It could be with Vita or Dun & Bradstreet, one of the credit reporting businesses. And it basically warns lenders, don't lend this person money, they don't pay their bills on time. But it's an unproven accusation. A court judgment, though, is a proven accusation. It's been proven in a court of law. It's gone to a magistrate's court. They've considered the evidence on both sides, and the magistrate has finally made a decision. If it's gone against you, then he said, oh, okay, we find in favour of whichever company has brought the action, and you do owe them this much. One of the main differences is a default doesn't give them the power to do anything, but a court judgment allows them to, for example, send the sheriff around and start repossessing goods to the value of.
Yeah.
But do people can they actually go? I've heard of heaps of cases. They've got a judgment. That's it. So can somebody actually go to see their judgment being heard?
Well, they should. They must. One of the regulations, they must get a summons, or a summons should be attempted to be served on them,
right,
to advise them that there's going to be a court case that they are required. They should be at. Unfortunately, a lot of summonses aren't served correctly. That's
well, they don't get them.
Don't get them. They can only serve a summons, of course, at the last known address, and so sometimes the person hasn't updated their address, and they can be wrong in doing that. But that's just one of a whole lot of things that have to be done before the person has a day in court.
Yep.
Can we just go back a step and let me ask you this question: Does everybody have a credit rating?
Everyone that's working does, yes.
Everyone that's like from what?
There's
is
about
there an age?
There's about 16 million. If you've got a paying tax, you'd have a credit report. There's about 16 million credit reports. The scary thing is there's about 3.6 to 3.8 million bad marks on people's credit reports out there.
Well,
Defaults
look,
and
I
court
know
judgments.
we see people almost on a daily basis that don't even know that they
Have
know
no
that
idea.
there's a credit rating there somewhere they've got a file of their own, but they don't know what's on it or what's not on it or whatever until they go to actually buy a lounge suite on credit or get a car loan or get a home loan or whatever.
Yeah, it's something that's very common, Greg, that people never find out that they've got a bad mark on their credit report until they actually apply for a loan. And that's a pity. People are entitled to get a copy of their credit report, and they're allowed to get one a year free. It usually takes about 2 weeks to come out, but if they contact one of the credit reporting bureaus, typically Vita, for example, go online to Vita, they can ask for a copy of their own credit report, and that's free. Or they could pay a fee and get it a whole lot quicker.
How many reporting agencies are there now?
There's 3 main operating credit reporting businesses in Australia now. Vita's the main one for consumers. Dun & Bradstreet's there as well. Dun & Bradstreet specialises a lot in commercial areas, and there's a new player from overseas.
What's Vita? Is that short for something like VEDA, or is it just a name? Or
Just a name to
just
my
a
knowledge,
name,
not too
right.
sure where
They used to be called what before?
Credit Reporting Association of Australia, CRAA, everyone still referred to them, I suppose.
CRAA.
Look at your
I still
CRAA.
Well, I think we'll have a link there on our website to do with Vita, so people can just go to our website and make that inquiry themselves.
I don't think even people know that somebody like you even exists
yeah.
on this planet.
I didn't know until a few weeks ago
No,
that you can do what you do. I mean, we haven't started talking about that yet. But okay, so there are many people that are in strife when it comes to credit rating.
Exactly.
And it may be through their fault or no fault of their own.
Most times they've got some level of culpability or some level of error on their part. But what we look at is, did the listing company follow all the rules and regulations they're supposed to? And we find in the vast majority of cases we investigate that the person hasn't been afforded all of the things that they should have been afforded by law. I'll give you an example. Very simple example. They should get about 3 warning letters before the default goes out. They should get a phone call before the default goes out. And sometimes these things don't happen.
Right.
But that's our job. We investigate and find, and our success rate's 83%.
83%. That is great. That is fantastic. So what that tells me is that you investigate 100 defaults and you'll get 83% taken off.
Exactly right. And that's an accurate figure. We've been keeping that since we started a number of years ago.
We're going to talk to you again after the break, Neil.
Thank you.
All right, Neil, we have to go to a break, so we'll be back in a few moments. You're watching the Mortgage Busters Show, and we're privileged to be with Neil Baker from the Princeville Credit Advocates, a very, very handy person to know.
Oh, yes.
Neil, 83% success rate.
Yeah, we're very proud of that.
That is fantastic.
Thank you.
You'd obviously be proud of that. How do you manage that? How do you get there? How do you do your job?
Basically, I get a call from a person who's been referred to me. I talk to them about what the problems are on their credit report. They tell me how it happened, why it happened. Many times I think it's their fault, and sometimes I don't realise that had they been afforded some of the things they should have, for example, offered hardship by a bank, that maybe had they been given that offer, they wouldn't have ended up with the default in the first place. After I've spoken to the person and tell them about our fees and such like, they decide they want to use our services, I just simply email out an application. Then we wait for them to be returning that, and one of our senior advocate managers will go through the process of checking out everything that's been done by the listing company. We start out by sending off a request to the listing company. It's more or less a document disclosure order, and they've got to send us virtually everything they've got on the person's file, every letter, email, phone call, file notes, everything.
They've got to give you that.
They've got to give it to us, yeah. They've got 45 days to do it. Look, we deal with these companies on a regular basis. We would deal with all the well-known organisations, banks, finance companies, telecommunication companies, and they know us pretty well. They usually get that information back to us in a couple of weeks. Our people go through it with a fine-tooth comb, looking for errors in the compliance. When they find those, they submit their case back to the company and say, you should have done this, you didn't. And they say, okay, you caught us, yes, you're right. And so then a letter is issued to Vita and the other credit reporting businesses to say, please remove this listing, an error was made in compliance.
How long does that take?
Vita are allowed to take up to 30 days to process correction orders. They're very good though, they usually get it back to us, or they usually do the correction in around about 2 weeks. So overall, from start to finish, I mean, a lot of our time is spent waiting for the other side to respond, but we take about 6 to 8 weeks to get a successful outcome on average. Look, there's some that are a lot quicker, there's some that are a lot slower.
Greg had a real good one the other day. We were just chatting about yourself coming on. And I thought that was great question. The question is, okay, you get it off. But what happens with these guys if they want to make the process and do it properly and put it back on again? Can they do that? The default or the judgment?
Yes, they can, if the debt is still outstanding.
Right.
What I would usually always talk to our clients about in my first conversation is that I see the debt still outstanding. What do you want to do about that? And one of the other services we offer is debt negotiation, so that we do it all at once, so that we find the error in the process in most occasions, get the default or the court judgment removed, and we also negotiate a suitable settlement, which could be a lump sum payout of the money, or if someone can't afford a lump sum payout of the debt that's outstanding, we'll often organise a time payment scheme.
And they still will take it off?
It still comes off, yeah.
Okay.
The coming off of the default or court judgment is separate to the debt. And that's why paying the debt will never ever remove a default. People are often under the misapprehension of thinking, if I pay it, it'll come off. The only thing that'll happen to your credit report when you pay it is the credit report will be marked as a paid default rather than an unpaid default.
And how long does it sit on your record for?
Normally 5 years.
So you're punished for 5 years for, it doesn't matter how big or small it is, even if it's $100 debt, you're going to have a blemished credit rating because
they put $100 on there, $110.
Yeah, used to.
I've seen them.
under the new comprehensive credit reporting, which we're very well versed in, that started on the 12th of March. The smallest default that can be listed now is $150.
Right.
So there's been a few changes to the credit code under the new comprehensive credit reporting. A lot of the public would have heard about this being out there, that if they don't pay their bills within 5 days, they're going to get a red mark. It only applies to financial facilities. There's been a lot of misinformation about this. It doesn't apply to telephone bills, gas bills or anything, but you will get reported into your credit report on your mortgage, your personal loan, your credit card, financial facilities.
Well, we're all about busting your mortgage, but we're also about getting the mortgage in the first place. So, if you can't get a mortgage, you can't bust it. You can't make the best use of it.
One of the best ways of busting a mortgage is to start the mortgage out on the right track by having the lowest possible interest rate.
Interest, correct.
And a lot of people, they basically there's only two alternatives. If they've got a bad mark on their credit report, they don't get a loan at all. Or if they've got a rather large deposit and they fit certain criteria, they might get a loan from some of the specialist lenders who will offer them loans at a much higher interest rate.
Correct.
And they end up costing the people an average $300,000 loan, $350,000 loan. A non-conforming loan would be about $10,000 a year more extra in interest payments.
Cars,
so how can you bust your loan?
Cars even worse.
How can you bust your mortgage when you've got that impost on you?
And if you want a car loan, forget it, because that's, I hear, very high 20s if you've got anything on your CRA.
So Neil, you obviously don't do this for free.
Certainly not. There are
but it must be, at the same time, sorry to cut across you, it must be very rewarding work.
I love it. The great reward that I have is ringing people or contacting people and saying, guess what, that listing's coming off. I had a lady on the phone yesterday, she's in tears as a result of knowing what we've done for her. And that's very rewarding. Of course. But we just charge our fees out in a simple process. I send the application out, they send that back. Our initial fee is $600 application fee. We move into stage 2 where all the work is done fairly quickly. Stage 2 is a flat $600 per default or per listing. We've got to go to individual companies to approach them. When we're successful and we're going to the Vita or Dun & Bradstreet to have it removed, there's a $300 success fee. So from start to finish it works out at $1,500.
Whether it's a default or whether it's a judgment.
It doesn't matter how long it takes. We could end up with a very, very difficult case. The case takes us a lot longer than the 6 to 8 weeks. We won't give up and we won't charge more when people know exactly what they're looking at.
Because if you gave it to a solicitor, Look,
Neil, we've got about a minute or so left. On this show, on the Mortgage Busters show, we always try and have the edge on everything when it comes to mortgages or anything related to mortgages.
Sure.
So do you have a Mortgage Busters special for our clients that are watching now, or our viewers that are watching now?
I'd like to just show a vote of confidence in what we do for all Mortgage Buster viewers and say that normally, we're proud of the 83% success, but the flip side of that is we're 17% unsuccessful. And we would be disappointed as they would be. If we're unsuccessful, that costs $1,200, stage 1, stage 2, they've done. If someone from the Mortgage Buster show gets in touch, I'll guarantee that if we're unsuccessful, we'll give back to stage 2 $600. So basically, maths is quick. That's $600 application fee is the only thing they're risking. On a better than 80% chance that we get it off.
Because you'll find out whether it can be moved or not. At
Yeah.
least.
Right.
Yeah.
At least
The alternative is you
something.
wait for it to fall off by itself, and that can be a long time.
No,
the price
no,
of
no,
property could go up
no.
dramatically while you're waiting.
I think our website's going to be running hot for the next few days.
We'll see.
Neil, look, it's been a real absolute pleasure having you on the show.
Thank
I'm
you,
sure we'll have you back.
Love to.
Absolutely. I think you're doing a great service out there for our viewers, but also for the wider public in terms of helping them get along financially.
Well,
Fantastic. So I really
we enjoy
appreciate
helping.
your work.
We certainly do.
Thanks
Thank you.
for
Greg.
You've been watching Mortgage Busters. We'll be back with Stephen Hudson, our permanent finance expert. He'll be talking interest rates with us. Welcome back, viewers. You're watching the Mortgage Busters show, and we have Steve Hudson, our resident finance expert, with us. And you're going to be talking about...
We're talking about today LMI and the effect on insurance. But before that, we had a great question come in for the website from
we
one of
did.
the customers.
We've had
last
quite a
week.
few good questions come
Yeah.
through on our website.
And just recapping what that was about was the first show we did. And we talked about the 3 major things that someone can do regarding their loan to pay down quicker. One is to have a offset account.
Of
we
course.
discussed that in some length.
Yes.
And have weekly or fortnightly payments.
Correct.
And make lump sum payments. Well, we had a question come in from Josie, who's unfortunately or fortunately, which way you want to look at it, has received inheritance for $150,000. And she wanted to know from after the show and seeing the show, should she put that into an offset account as a one-off payment, or what she would really like to do is go and buy an investment property.
Right.
Well, she can do both. She can pay off into a loan, either in the offset account or just paid straight off the loan, and then through a loan structure is actually then go and buy an investment property by leveraging off the equity that she currently has in her property. So she
Fantastic.
can win, and if she talks to her accountant and get proper advice on that, she'll probably find it'll be more tax effective that way too.
Yeah, right. Actually, that's a really good response, Stephen.
It's been fantastic.
Yeah.
Yeah,
Yeah.
it's been really good. So today, what I was wanted to talk about was loan mortgage insurance.
All right, so LMI.
What is it?
Does it stand for, well, of course,
Loan mortgage insurance, yeah.
mortgage insurance.
Yeah.
So when does someone need LMI?
Banks, lenders have different criteria, but in general, the rule is that if you don't have a 20% deposit for a purchase of a property,
Does it matter whether it's an investment or a...
no, it doesn't matter. There is some different criteria on it, but generally, in general rule, 20% deposit for investment or for your own principal place of residence, PPR, they would then require you to have an insurance taken out. There's a couple of insurance companies in Australia that do it, that the banks or lenders go to. There's 2 in Maine. That's Genworth or QBE, and they take a policy, and the policies do vary in amount depending how much deposit you have. So if you've only got 5%, it's going to be more expensive than if you've got 15%. So there's a scale.
I want to buy a $400,000 home.
Yep.
And for that, to get a loan, a standard loan, from a standard bank, I'm going to need 20% deposit,
Yep.
which is $80,000.
That's correct.
So if I don't have $80,000, if I've only got $30,000, I still can get the loan, but I've got to pay this lender's mortgage insurance.
Absolutely.
Okay.
Absolutely. So best practices is 20-80%. I've even heard people actually say that you should never have loan mortgage insurance.
Right.
And but the thing is, it stops people from getting into a marketplace, and there is opportunities for people to get a 5% deposit, get into the marketplace, and that, you know, if properties are going up by 10% a year, and you're buying the example of $400,000, then they've missed out on an opportunity of $40,000 that year in growth.
Correct.
So paying mortgage insurance is not a bad thing if the market is in that condition. But what I really want to talk about today was also some other comments that other commentators have made about mortgage insurance against versus interest rates. That because mortgage insurance can be quite expensive, that you could be paying thousands of dollars more from one lender to another, so interest rates are not important. So yesterday I did a bit of research on that, and there isn't that much difference in most cases, but where there is a difference, there is some good examples. And what I've done on the whiteboard there, if I may, this is a 90% lend on a $300,000 purchase, $270,000 loan.
Okay, so normally to buy that property and get a standard loan, you'd need $60,000 deposit.
Correct.
Right.
Otherwise, no mortgage insurance, not a problem.
Right.
Okay. This is the LMI, and I picked out three lenders, and this is the actual dollars that you would pay on that scenario with these various lenders. Okay. So you can see there's quite a significant difference in A and C in saving.
Yeah.
And these are the interest rates. Okay. So you've got this lender here is 5.08 per year and 5.31% against 5.9. Okay, pretty straightforward. So you could, some people in the marketplace would be saying, well, based on the LMI, you really should be jumping over here because it's going to cost you $1,000 more. And as we spoke previously about making lump sum payments, 5%, $1,000 over a 30-year period, interest rate would be about $900 to $1,000. So effectively, this is going to save you $1,800 over the period of the life of the year, the life of the loan. But if you have a look at this is the interest that you're going to be paying over 30 years. This loan here, you're going to be paying more on your mortgage insurance. You're $267 against $320. You're nearly $50,000 more in interest over the period of the year. So
that's a big difference.
Big difference. So what would you prefer to pay, Adrian?
Yeah. Yes.
Of course, the first one, because it's the least amount, yeah.
And given the interest rates are pretty low at the moment, if they do go up over the period, you could be paying more. So that's what I wanted to highlight today.
Right.
Was that...
Does the LMI, is that paid when the loan is triggered?
What happens with LMI, what it is because you're not paying the required amount for deposit, it puts you, and it's not necessarily the case for certain individuals or situations, but it puts people into a category of statistics that says you're more likely to default on your loan than someone that's paid 20% deposit. So that's where the banks want the insurance. The insurance company pays you pay the actual premium to the insurance company, and if for some reason during that period of that loan you fall over and you don't pay it, and the banks then go to the insurance company and get the money for the rest of the loan.
Right.
And obviously the house will be probably sold, but the difference between that amount and the amount that you owe they've actually paid to the bank, then they will come after you for it. So it's not an insurance policy that no responsibility. It just means that the bank gets their money or the lender gets their money in that scenario.
All right. Now, just one more question with that LMI. Is it tax deductible?
On an investment, it is.
Right.
It's when you speak to your accountant, he'll advise you how that will be written off. But generally, they're written off between 4 to 5 years. But for your own place, no, it's not.
No, it's not, of course. Thanks very much, Steve.
Greg,
that was
Adrian,
very enlightening.
Thanks for coming.
Yeah,
wonderful
thank you.
work. We'll see you again next week.
You will. You will.
Absolutely. And viewers, we'll see you again next week too. You've been watching the Mortgage Busters show. We strongly recommend you go to our website, which is
www.tmbshow.com.au.
TMB Show, which is the mortgagebustersshow.com.au. www.tmbshow.com.au. Go there. All our links will be there. They'll have a link there to Niel Baker, who you've seen today. Find out what your credit rating's doing. There'll be links to Steve Hudson, links to our past episodes, but most importantly, find the section where we offer you a free thumbprint report. Put your name down there and one of us will be in touch.
That's right.
We'll help you. We'll produce a report for you that will help you bust your mortgage,
Get rid of it.
but also build some financial security around you. So until next week, I'm Greg.
I'm Adrian.
Enjoy the week and we'll see you next week.
All the best.